Hello, everyone. And today, let's go to double entry system on how you can answer the question for the double entry and how you can do the question for the double entry. So the topic and the subtopic for today, we have the double entry. So under the double entry, you're supposed to know the financial items, the one you're supposed to record in the books. Supposed to know the rule of double entry, how to post into the ledger accounts, how to close the ledger's account, and how to transfer those balances to the trial balance. And now, what are you expect from the questions and how you can answer them? So you're given a certain question here. So if you can able to view the question for the double entry. So after the question, the request said that record the above transactions into the ledger accounts and extract the trial balance. So before I go to that small question, let's try to review what are you supposed to know about the double entry. So you normally know that the term double means twice. That means for every transaction, it has to be recorded twice. So the simple term that you normally use as accounting, we normally say that there must be debit and there must be a credit. So one transaction recorded twice, once on the debit and the other one on the credit. So it depends with the question and the kind of the transaction. So when supposed to take to the debit and when are you supposed to take to the credit? So what are these financial transactions that you normally record? So the financial transactions, normally call them financial items that a business always has. And these financial items, you're supposed to know them. We have the assets. We have liabilities. We have expenses. We have incomes. And finally, we can have capital. So those are the financial items that always being recorded, and because those are the transactions for the business. So once you know these assets, liabilities, expenses, incomes, and capital, the next thing you're supposed to know is the rule of double entry, how to record them in the ledger accounts. So you have to know the rule of double entry. The rule of double entry. So in a simple term, because it's a revision that if you have assets and expenses, they follow the same rule. We can say that increase, that means they are coming into the business, increase, you debit. Decrease, credit, as simple as that. Then liabilities, stroke incomes, stroke capital, they also follow the same rule. That is increase, you credit. And decrease, you debit. That is the simple rule that you can follow. So the rule is how you can go to deposit them into the ledger's account. And the ledger's account is always a T account. So you can have the name of the transaction, name of account. So the ledger account is always a T account. So when you hear that, I'm talking about the debit. So that this is the debit side on the ledger. And the other side, this is the credit side. Of the ledger. So the T account is the ledger. So let's do the question so that you can able to see how can you close them. Then you transfer the balances to the trial balance. So that that is when I'm going to explain for you the trial balance. So the first transaction say that on 1st January, James started a business with 500,000 by check and 100,000 in cash. So every transaction, every date, you record them on the same day and which account you are supposed to open on that transaction. So this person is starting a business, and always know that if you are starting a business, the amount that is coming to your business is your capital. So that capital can come in terms of check, which is the bank account, or in terms of cash. So this one, we have the check and we have the cash. So we have two accounts already. You can see the check is the bank and the cash. But you don't forget that always, if you're starting a business, the starting point is the capital. So that means you're supposed to bring your capital account. So you can start drawing those three ledgers account that has been affected in that transaction. I have like capital account. So we can say that is the capital account. Then on the same day, that transaction has another two accounts that we need to draw and post them. So we have check, which means bank. And I have cash. So now these are the ledgers account affected in that transaction. And now you have to know how do we debit and how do we credit. So if you go to the rule of double entry, always capital, follow the rule of liabilities. So that, and remember when it is coming to the business, it is now is like increasing, because when the business was not there, it was not there. But when the business is starting, it is now coming to the business as an increased value. So if a liability increases, you credit. So the first one is by check. That is 500,000. So I'll use the figures into thousands. So once I credit capital, automatically the next account should be debited, because the rules say that once it has gone to the debit or the credit, the other one has to be the opposite side. Again, bank is always your asset. And when an asset is increasing, you have to debit. So capital of 500. So that is the double entry. One transaction recorded twice, debit and the credit. And still on the same day, there is cash also coming in, and capital is also a liability. Always liability can increase your credit by 100, and your cash is your asset. So asset can increase, you debit because of capital, 100. So I'm using the Shilling figures into thousands. So I'm ignoring the 3 zeros behind. So that transaction is fully completed. Then you go to the next one. On second, bought goods by check. So it's buying the stock. The term goods means stock. So you're bringing the stock to the organization. So always, if you're buying goods, you open an account known as purchases account. So you open purchases account. So we can call this one as our purchase account that is coming in. It was not there. So call it purchases. So the goods are being bought and the management is paying them, or the business is paying by check. So that means your money is moving out of your bank. And bank is an asset. So if the bank is reducing, you credit, and it is bringing purchases of 80,000, that is 80. So once the transaction has been credited now in this bank account, that means automatically I'm going to debit my purchases account. And purchases is like your stock, and your stock is your asset. So asset can increase, you debit by 80. So that transaction is fully completed because double entry already mepita. Then you go to the next one is on 5th, sold goods on credit to Latin. So it's making sales. Sold goods means you are making sales. And these sales you are selling to this customer, and this customer is not paying at the moment. It's buying on credit. So you have to recognize this customer as your debtor to pay you later. So I'll open the two accounts, that is the sales account and my debtor account. So this one I can call sales because I'm making sales. And this is my data, and this data is Latin. So I have to know that I have account over Latin as my data to pay me back my money later. So if you're making sales of the business, that means the sales are increasing because you are selling. And sales are incomes. So income, so long as the income is increasing, you credit. And you are selling to Latin. The amount of sales on credit is 60,000. So always know that the debtors, the people who have the DNA of the business, are always assets to the business. So when an asset increases, you credit, you debit. So that transaction is complete, both the debit and the credit. Then the next transaction is on 6th, bought furniture in cash. So it's buying a furniture. So this time, this person is not buying goods, it's buying furniture. So the furniture is an asset to the business. So don't record it under the purchases because that is not the stock. So cash account already we have, but I can only open the purchases, the furniture's account to record that transaction with the cash. So I have furniture account because I'm buying my asset to use in my business. So you are buying that asset and you are paying by cash. All of them are assets, but one is reducing, one is increasing. So the furniture is coming to the business, so it's an asset. If asset increasing, you debit. You debit with an amount of 40,000. Then the cash is reducing because it's buying asset, which is furniture. So asset reduce, you credit by 40. So that transaction also completed. We go to the next transaction. That is on 10 sold goods, 150 by check and 50 in cash. So it's making some sense. And now these sales are now coming in terms of by check and in cash. So that means our bank is receiving from sales and cash is also receiving from sales. That means they are increasing. And sales is also increasing. So sales is increasing by check, that is bank. Sales is an income. When an income increases, you debit, you credit by 150. And because I'm selling and receiving checks, so my bank is receiving some check from sales. So asset increase, you debit 150. Then on the same day, my sales are increasing because I'm selling on cash. That is 50. And my cash account is also receiving something from sales. So my cash, my asset increasing by 50. Then on 15th, paid electricity by check. So check is my bank, so I don't need to open bank account, but I don't have electricity. I have to open electricity account down here. So this is my electricity account. So I'm paying an electricity. Electricity is an expense. So if an expense increasing, I know someone will say that you are paying electricity so that it is reducing. No, it is increasing. It is an expense that has come in, you have to pay it. And remember, you are paying it by issuing a check of 20,000. So the bank is reducing because money is coming out of the bank. And if an asset reduces, you credit 20. So once the bank has been credited, so automatically I have to debit my electricity by 20. Then the next one is on 23rd, received check of 30,000 from Latin and allow a discount of 5,000. So Latin was a customer that was sold some sales on credit on a certain date. Therefore, so if you go to the account of Latin, Latin is supposed to pay a debt of 60, but is paying the debt by issuing the check, giving the check to the business 30. So it's like reducing that 60. So the bank is receiving something from Latin. The bank is receiving 30. And Latin is an asset, and this asset is reducing because it's paying some amount to the business. So it's reducing the liability by 30. Then after paying that 30, and the total debt was 60, the firm allow this customer a discount of 5,000. That means that discount is going to reduce the liability of Latin, and you need to have it as a discount allowed. So discount allowed will be an expense to the business. So I'm bringing another ledger account here, known as discount allowed, a discount that you're allowing to your customer not to pay you, or after reducing the liability. So discount allowed is an expense. So if an expense increases, you have to debit 5. And Latin will have to reduce this discount because it's been given that discount not to pay it. So it will reduce the debt. And we have to credit Latin. That is an asset. And an asset, if reduces, you credit by 5. Then you can go to the next transaction. That is on 24th, Latin Limited return goods back to the firm. So if a customer is returning some goods back to the business, don't record them inside the sales account. Record them under another account known as return inwards. So let's have return inwards to recognize the goods that has been returned back by the customer. Don't record them inside the sales account. Record them under the return inwards. So the question is, how can I record that transaction? So first of all, go to the customer who is returning. So remember, Latin had a debt of 60, pay 30, given a discount of 5. But the remaining balance is returning back some goods, so that amount is going to reduce this debt again. So that means you have to go into credit this account to return inwards. That is 2,000. So once I have credited Latin, so that means automatically I have to debit my return inwards, even if I don't know why. So from Latin to then on 26th, both. So there's something what bought goods on credit. Bought goods on credit from Galaxy. So we said that the term bought goods means purchases, already have purchases. And this time the firm is not paying for these purchases. It's buying them on credit, will pay later. So you have to recognize the name of your creditor. So that means that is a liability to pay later. So I have to open Galaxy Traders as my creditor. So this is my Galaxy Limited, and this is now my creditor. A creditor is a liability because you have to pay it. So when a liability increasing, you credit, and because you are buying them on 70, so purchases is your stock, which is increasing. And if a stock increases, that is like your asset, you have to debit. So Galaxy 70. So that is a simple double entry that you're supposed to do. So that means in every transaction, you have to identify which item is an asset, expense, liability, or an income. And that one already, you know the rule of double entry, when to debit and when to credit. So I'm done posting them into the ledger's account. That is how you can post them into the ledger account following the rule of double entry. Then now is to close the books. All the transaction has been recorded, so you have to close the books. So the closing the books, always look about the side has which has the highest amount. That is the figure that you have to use as the ending balance. So my capital credit, I have two figures adding to 600, and debit, I have 0. So the total amount, the highest amount will be 600 on the credit. So that means our closing figure here is 600. So it is the same amount. That should be at the end for both sides. So my credit has two figures, which is adding to 600. My debit has 0. So I'll pick the highest, which is 600 minus 0. I still remain with 600. So on the last day, that means now the balance carried down, all the balance carried. So my balance carried down on the last day. That is the balance carried down, and that account has been closed. Then I come to my bank account. I see debit is higher than the credit. So how much is in my figures on my debit side? Their total is coming at that amount. So it is the same amount that should be, because it's the highest one. So the highest minus the lowest figure. So can get my balancing carried down in this account minus these two figures. So that means at the end of the trading period, the balance remaining in the bank account is 480. Then my cash account, I can see debit is higher than the credit. So I use the highest figure to balancing off. So this is just 150. So that means at the end of the trading period, the amount I'm remaining now here is 110 as my closing balance. That is the balance that is remaining in the cash account after the trading period. Coming to my purchases, always purchases, there will never be a value on the debit, on the credit side when you're doing the double entry. So if you see that you recorded a certain figure on the credit side, automatically you have made a certain wrong. The figures on the purchases will always be on the debit. So their total is 150. So 150 minus 0 figure that is on the debit side, on the credit side. So I still remain with 150. So at the end of the trading period, purchases closing balance is 150 in that account. Then again, sales also has a same unique feature with the purchases. The values always appear on the credit side of the sales account. So that if you see there is a figure on the debit, know that you have made an error while posting that into the ledgers. So it is 260. So that means minus 0, I remain with the 260 as my balance carried down. Then the next account to close down is furniture. It is only have one figure on the debit. So it is 40. So 40, that means at the end of the period, the balancing in that account is 40. So that is the balance carried down. This one, also the debit is the highest by 20. So that means the balance at the end of the trading period in this electricity carried down is 20. Discount allowed, I only have one figure on the debit side, which is 5, and it is the highest one. So I balance it by that 5. So balance carried down is 5 in that account. Return inwards, the debit is the highest with the 2. So I use 2 to balance the books. 2 minus 0 is 2. So at the end of the day, the balance carried down is 2. Then the Galaxy, the credit is the highest now this time with 70. So this is 70. This is 70. So the balance carried down is 70. So that is how you can post them and now close your books. So you have already closed all the books and you have the closing balances at the end of the trading period. So if you review all those ledgers accounts one by one, you realize that into some accounts, the balance carried down is appearing on the debit. Like capital, the balance carried down is on the debit. And the bank, the balance carried down is on the credit. So that one will tell you something. And that's the thing that we're going to use it when you are not transferring the balances to the trial balance. So the trial balance, we always record the closing balances. So trial balance records closing balances from the ledger accounts after trading period. So all those balances carried down, they are being transferred to the trial balance. And you can just say that where balances of assets stroke expenses are debited, while balances of liabilities through incomes through capital are credited. So anytime you see a figure on the debit side, the trial balance, know it is an asset or an expense. Any figure that you'll be seeing on the credit side of a trial balance, it is an income, a liability, or a capital. So James started a business, so we are going to extract our trial balance. So we can call it James. Trial balance. So I don't know which date was given, so we can just say as at 31st January 2023. So you can have a column for the credit. You can have a column for the debit. Then here you can have those transaction balances. So that is our trial balance. So you start transferring the item one by one. So I said that assets, the closing balances of assets, expenses should be appear on the debit. Incomes and liabilities and capital should be on the credit. So if you come back to your accounts, to identify which is an asset, a liability may be tiresome. So just look where the balance carried down is appearing. If a balance carried down appear on the debit side, when you go to the trial balance, make it opposite on the credit side. So like my capital here is on debit. So if I go to my trial balance, I put it on the credit, the 600. So I go opposite. So say capital. In my ledger is on the debit, so I bring it here on the credit, 600. Then I have bank. Then I look where the bank balance carried down is appearing. So the bank, it is appearing, the balance carried down is on the credit for 80. So when I come here, I put it on the debit for 80, opposite. Then I go to my cash. So inside my cash account, the balance carried down is also appearing on the credit, 110. So when I go to my trial balance, I go the opposite way, 110 on the debit. Then the next one is purchases. The balance carried down is on the credit, so I bring it on the debit chuku. So purchases, 150. The next one is sales is appearing on the debit here. So that on my trial balance, it should be on the credit. That is 260. So sales 260. Then the next transaction is Latin. Latin, we didn't balance it off. So you can see the debit is the highest one. So I'll use that one to balance it off. So the highest is 60. So I have 60 minus the amount that he paid, minus the discount given, minus the return amount that he returned back to the business. So I'll be having so we have a balance carry down of 23, but on the credit side. So it must go to on the debit side. That is 23, Latin. $23. So done with the Latin. The next one is furniture. Furniture is on the credit, so I go on the debit, 40. Electricity, the same, 20. So furniture, 40. Electricity, 20. Discount allowed, 5. Is on the credit, so I have to bring it on the debit. Discount allowed, 5. Then return inwards is on the credit, so debit, Galaxy debit credit. So return inwards, that is 2. And Galaxy, $70. So I think we have transferred all our closing balances into the trial balance. And now I can try to get the totals of the debit and the credit. So this one should be 150. So the value of the bank is 580. And now our trial balances that says balancing at that moment. So now after balancing a trial balance, that means we are okay with the posting them into the ledger and transferring them to the trial balance. So a question may come in an exam room so that they can give you those figures into one column. To 60, 23, 40, 20, 5, 2, 70. So it can be given them in that order, and they say this is capital. They say this is bank. They can tell now this is cash. This is purchases. Sales. Latin. So maybe you may not know, then they tell you this is a data. Then furniture. Furniture, you have electricity. Discount allowed. Discount allowed, return inwards. Then Galaxy. And the Galaxy, because they can tell you this is a creditor. Then the question say extract the trial balance, prepare the trial balance. That means the transaction has taken place and now you've given the closing balances and they put it in that way, tell you extract the trial balance. So it is upon you to identify which is an asset here, an expense here to be debited, the way I've debited them here, which is a liability and which one is an income at the same time, which is a capital. You have to credit, they have credited them here. So that is how the question can come. Then you prepare your, already been done everything. Now prepare the trial balance. So that is how you can prepare the trial balance by identifying which is an asset and an expense on the debit, liability, incomes, capital on the credit. So that is how you can do the question for the double entry.